And so I will like to just recap what we have done. This is our eighth week of engagement with being together, and the eighth week. So continuously for the last about 2 months, we have been together, and it has been a very good journey. I hope you have enjoyed all the sessions that we have done, and our attempt to make you understand about the finance aspects relating to finance. In a not-for-profit, which the programmers or basically the non-finance people should know. So we began our understanding of what finance function is in an organization. That was our session number one, and then we moved on to what is our bread and butter, which is basically grant management and funding and all aspects related to costing and budgeting. I hope you would have understood that, and basis that you will practice it in terms of the budgeting process in grant execution, grant negotiation, all that. Then the third session was actually on understanding our top level financial statements, and because we are the people who are actually talking to the outside world in terms of our organization. The fourth session was on procurement policy, because that is accounts for a major component of our work uh, in our various projects. The fifth one was on understanding the compliances for not-for-profits, and we had seen why we are a not-for-profit as a separate category. Okay, then the sessions progressed in terms of the the next session being on risks and controls, and we had understood the various aspects relating to risks and controls and what it means. So the session today is actually on audit and assurance. So after having understood that there has to be a need for internal control and the risk that organizations are running, and we had seen about risk management policy and risk management process, today we are trying to understand about audit and assurance. Now why we need to do that is because our financial statements or our financial transactions is something that has to be checked by a third person. Okay, now unlike program, where generally our program data is not authenticated or validated by any other third party organization unless there is an audit of program audit. Generally for financial data, the audit is always done by a third person, sometimes by people within the organization if we have an audit function in the organization. But generally for purposes of talking about the financial statements, about how the finances are being managed, how controls are being implemented, there is normally a third person. And when we had talked about financial statements in our session number 3, then we had said that the financial statements have to be certified by an auditor. Okay, who will do the audit and say whether the statements are giving a true and fair view. Now this is what actually audit is. Okay, and then there is a difference between audit and assurance, and we'll see why that is. What are the various steps in the audit process? Because every time there is an audit, the program people are also drawn, so we must understand what this process is, understand what is involved in the audit process, not just the finance people, because the execution of projects has been done by us. Transactions have actually been done by us in terms of monetary transactions or activities, although they have been recorded by the finance team. Then we will do some aspects relating to ethics, some aspects related to accountability and transparency. What is the meaning of these words and how should we practice it in organizations? Now, I will deal with this word called fraud, which I dislike, but we will have to have an understanding of what this is so that we are always aware that such situations may be considered as fraud or red flags. So that will help us understand these words. It's more important to understand these words and see situations where such an event may occur. So it's not something that I like talking about, but I would want you to understand that, so that whenever there is a problem, then you probably can relate to these words and understand. So let's understand what is the difference between audit and assurance. Okay, there is there is a little bit of difference. Okay, so audit in very simple terms is basically independent. Okay, and as I said, this is generally by somebody who's outside of our organization, and that is why the legitimacy of audit comes, or the the people believe in the audit and the audit report, primarily because they know that this has been done by somebody, this examination has been done by somebody who's independent. Now, what is independent? Independent means somebody has been given that authority to be independent. That certification has been given by the Institute of Chartered Accountants of India, that you are an independent person and you are authorized to go and examine the financial transactions, the financial books. Okay, so not only the transactions that programmers have done, the records which are the invoices, the vouchers, the other things that finance people have prepared, and the processes. Okay, processes means internal audit processes. Okay, so what is the examination going to say? The examination is going to say whether these processes, these documents, and these transactions are accurate, they are transparent, and they are compliant with regulation. So the idea is that this examination, which is a systematic examination, is able to give us accurate information, say whether these information is accurate. Okay, whether this this is in compliance with internal controls that we had seen last time. Okay, and that the transactions are transparent, so everybody will see the transaction, they will think the transaction is the same. Then compliance with legislation is part number 5 that we had, session number 5 that we had seen, that are our activities compliant with laws, the income tax law, the FCRA law, the CSR law, the social security laws. Basically, this is what is done. Now, normally, when it is a statutory audit, then there is an external auditor that will come. But when there is an internal audit, then as the type of audit we will see, then normally it can be done either by an external person or by an internal person also. So the goal of audit, the objective is of audit is to say whether these financial statements are reliable and valid, and on the basis of that, if any decisions are made, then based on these statements, the decision they can be relied upon, and the decision by any stakeholder, whether it's a donor or government, can be taken based on these audited financial statements or audited reports. So basically, audit is fairly intensive in that sense that there is a lot of scrutiny that is done, systematic scrutiny that is done to understand whether the data or the transactions are something which are accurate, in line with laws, in line with internal control processes of the organization or not. And then at the end, once the audit is done, the auditor will provide an opinion whether the transactions are true and fair view. They give a true and fair view of the state of affairs of the organization or not, as we have seen when we were talking about financial statements. Now, assurance, on the other hand, basically is much, much broader, and audit is part of assurance. Now, assurance is less intense than audit. Okay, that is, again, assurance is also done by a professional auditor, an independent professional who understands the various aspects related to finance. So assurance basically is to say whether the information on the basis of which opinions have been given, those information is correct also or not. So basically, it means that you rely on the information that on the basis of which opinion. So every opinion that comes is based on information. Okay. So the information risk, the risk that the information is not correct, is what is probably the bigger aspect of assurance. Assurance is more broader than audit. Okay, and assurance is more kind of less intense compared to an audit. So if we were to look at assurances, then we will have examples which are, are we doing an audit of the financial statements and saying whether the information is correct or not? Are we doing a compliance audit of the level of compliance of that organization? Are we doing an assessment of the internal controls? So these are non-financial areas. So assurance does a kind of an opinion on both financial as well as non-financial areas. Okay. So, but the information risk, whether the information is correct or not, is what is the primary idea behind an assurance, okay, for decision makers. So, but audit is also part of assurance. That is something that I just want to say. So assurance is much, much bigger, but it is less lengthy and intense. It's more to give that confidence to stakeholders or decision makers that, well, the information on the that has been used, or the information on the basis of which financial statements have been made, they are correct, and can include other areas, that is compliance areas relating to internal audit, and areas related to information technology, even areas related to quality. So there can be an assurance on quality delivery. Finally, what do? We provide service delivery. So what has been the quality of services that have been provided by this organization is what is called the quality. What's a quality audit, which is more like an assurance rather than a detailed audit. Next slide. Now, so what we have to understand is the reason for audits. And here I want to also bring on the concept of what is called a review. Okay. So there is a difference between audit and review also. As we have seen, there is a difference between audit and assurance. So the reason for financial audits, as we have seen in the previous slide, is basically it's a governance. It's a, the financial audits basically are governance tools. It tells the governance structure. It tells the board of directors or the governing body of an organization whether everything is going right or not. Okay. So the governance structure needs an assurance, okay, that everything, the management and the work that is being done and the resources and the assets of the organization are being used as they should be intended to be used for. I mean, if project funds have been given, are the project funds being used properly or not? Therefore, audits are very essential for giving that assurance to the governance structure. Now, audit is more thorough, and as I said, audit is more intense and provides higher level of assurance. Now assurance itself may not be a very high level, because it is broad understanding. Similarly, review is also less intense assurance with a lower level of assurance. Okay, so a review will generally see whether the statements are plausible, is everything that is there looks okay or not. But we have not gone into the details of each and every transaction, which is the case in the case of audit. Now, what are the objectives that audit serves? One, it checks whether the internal controls that have been laid down by the organization, and please remember, in the last session we had talked about internal controls and the types of internal controls, the areas of internal controls. So in all those areas of work of that organization, are the internal controls being practiced and implemented properly or not? That is the first primary objective or the priority of audit. So we had seen in the previous slide one that the audit wants to give an opinion on whether internal controls, whether compliance controls, whether transactions are accurate or not. And if the internal controls are there, then those validation will happen through an audit. So it's very important to have internal controls in various areas, because it is against those internal controls that the actual work will be audited or verified or scrutinized by the auditor. The second is audit also checks the gaps. Now that is what is called as detective activity of audit, where they want to see, is there a gap in the internal controls which was not looked at the time when the internal controls were made. So this is what is called as detective controls, and based on that, and we had seen that in the last session, preventive control, So preventive control is already in place. Detective control is through the process of audit. And then once you detect a control, you have corrective control, which becomes the preventive control in the next cycle. So the second thing of audit is to say whether the internal controls are up to date or there is a gap in internal controls. If that is the case, then more internal controls in areas where the gap has been identified by audit during audit will actually be put in place. And the third thing is, are people following internal controls and doing their work based on internal controls or not? So these are the three primary priorities of audit when the audit exercise is being done. So I think you've understood what the difference is between audit, assurance, and review, and what audit actually tries to do. Now, assurance, while audit, statutory audit is obligatory, so it's mandatory. Internal audit, an assurance that that management wants to get, or a review that the management wants to get, is not something that is required by law. However, as the organization grows, or at some point of time the management might want to have a review of their operations, is when this thing called review and assurance comes in. Suppose I want to understand whether my information technology area is properly functioning, doesn't have risk, which is what I call as digital risk. So, and are those is the information technology area properly covered for those risks? Are there additional things that need to be done? Then you might have an assurance for that particular area, okay, in terms of an IT audit, and to understand whether everything is all right, or additionally some things need to be done. That's basically an assurance. And a review is lower level of assurance, basically to give the confidence that everything is going on well. However, audits are more systematic, more detailed, and a higher level assurance is coming, because the auditors are generally independent people, and they are bound by certain protocols as far as audit is concerned. Now, so next slide. So we have understood what the rationale for audit is. And as programmers, what happens to us when we come across an audit is why we don't like to kind of be associated or look at audits very constructively. One, because it draws us from our our normal work, because it there is a lot of information that has to be provided, a lot of discussion that has to happen. So that's one reason. The second is, the auditors, when they come, because they are external people, they will ask for a lot of information which then needs to be collected. So if it is not fully organized, it takes a lot of our time. The third is, they point, and that's very natural that they point to mistakes which we don't like. However, audit has to be looked at very constructively, is what I would suggest, because anything which will give us an indication of improvement is something that we should look at positively. And the fourth thing is, sometimes the auditors might come up with observations which might not be very practical, because they don't understand the day-to-day nuances of our work on the ground. And therefore, at times we think, well, this is an observation which is more theoretical rather than practical, because if you go to the field, that is how. But however, I will again mention here that auditors are external people. They are not part of our organization. They don't work on our projects day in and day out, and therefore they might come up with observations. So it's our responsibility to explain to them the context, the reason, the ground level realities for them to understand, and then look at the entire activity or entire situation in that sense, and then make observations, rather than not answering to them or not interacting with them. So what I want to say is that at times programmers do not like audit for these reasons. However, in the next slide, let's see how we should approach audit. Next slide. So our approach to audit should be constructive. As I say, this basically, it should be looked as not negatively, but it should be looked at as a constructive activity. Okay. Now, second thing that I would say, constructive means the auditors are there to give you some ways of improvement of your work. That is what I mean by constructive. The other one is, of course, negatively looking at it. So the previous slide, we are looking at it negatively, but here I want to tell you is that we have to look at, when we have normal, monitoring meetings, also there is a lot of points that come up during those internal meetings, but we don't look at those as negatively. We look at it as ways and then discuss how we need to improve ourselves. That is the second point that first point that I want to say. Similarly, like the monitoring meetings, when you have these audits coming, they have to be looked at in a constructive fashion. Okay, if we look at it as a constructive fashion, then definitely we will, go to the second point of wanting to improve based on good observations that have come. So the auditors will make observations, they will come up with findings, and they will also come up with recommendations. Now, once the recommendation has been made, we might want to improve. We might want to improve because that is in the interest of the organization. Okay, uh, therefore we should not be negative about it, but we should look at it as an opportunity for improvement of our organization. After all, if the organization is improving, it is becoming stronger, the internal control systems are better, compliances with regulations are better, and that is what is validated by the audit, then the organization will become more stable and more sustainable in the future. And that is also our job, basically, because at the end of the day, if we have a strong organization, we have the existence of the organization is ensured. Then the other thing is understanding the auditors, and I have written the word mutual understanding. Why is mutual understanding important? Now, when there is an audit, it is like a external person coming to your organization. So how should you approach that person? You should not approach that person by saying that that person doesn't know. That is a truth, that the person doesn't know our organization fully well. Now, the best way is mutual understanding. Let the auditors know about your organization, and let you also understand what is the basis on which that auditor is coming up with some kind of a finding or some kind of an observation. Now, that observation may not be completely linked or aligned with the way that we work, but it can lead to improvement in the way in our work. That is what I'm also saying. So the mutual understanding is something that might come up with some kind of activity or action plan which you did not think of, but because he's an external person and he's doing audit in hundreds of organizations, he might also be looking at good and best practices in programming, in finance, in compliance, which that auditor is bringing to our organization, that which we did not know. So that understanding will increase the possibility of best practices rather than only looking at the activity negatively. Next is an audit. A good audit is a badge of honor. Basically, what it does is that it makes you feel proud that your organization has undergone the audit, and the audit has actually not come up with many findings or observations. So there can be observations which are in the nature of process level, where the internal controls are what might be lacking, or second is what is called as systemic observations, where the system is not there. When we talk about financial management, there are financial systems. The financial systems should be in place, but within those systems, if some processes are lacking, they can be corrected. But the financial systems should be in place. If the financial systems are not there, then there are systemic risks or systemic observations and findings which are more dangerous. So what I'm trying to say is that this, if we are able to get the audit through, okay, and come up, then the auditors are not able to come up with any systemic risk, but they are only looking at our process level risks. which are process improvement, as it is called, which all the time will continue to happen. Even after 10 years, you will have process level improvement, because as your organization will grow, more and more internal controls will be required, because the complexity will increase. However, if you are coming out clean on your audited through your audit, then definitely it looks as though, yes, well, we have done a good job. For instance, my organization, one organization that I was there, it was under the audit of the Comptroller and Auditor General, which is the C&AG audit, which is the Government of India's auditors basically. And our organization was obliged to get audited by the C&AG, which is a fairly dangerous kind of a audit exercise, because the C&AG can come up with any observations and the matter can go to the Parliament. So when we went through audit for 2 weeks or 3 weeks, after that, the observations that came were more in the nature of process level improvement, and they did not find any systemic risk in our organization, anything which will affect the very basis of our organization. Then we thought it was a very good, it was like a badge of honor for us, and we kept talking about that in all kind of external meetings that happened, okay, saying that, well, we have gone through C&AG and they were not able to find out any major deficiency in our systems. That's what I'm saying. The last point why we should approach audits constructively is that it builds trust. We had seen that the audited financial statements are financial statements that we have prepared, but are audited by an independent person. And we had seen audit is a systematic examination by an independent person. Now, once the independent person has done it, everybody in the outside world will put reliance on that particular statement, because it has been audited and certified by an independent person who is qualified and who is certified by the institute, and qualified by way of examination and qualified by way of experience, to give that audit report. Now, once that is there, then the trust of all stakeholders, whether it's donors or government or even the community or anybody with whom you are dealing in matters of finance, will automatically come. That's what I call as trust of various stakeholders. So if you do not have audit, then probably whatever you may talk about in terms of your financial transactions and your reports, people will not put the same level of reliance unless it has got audited. And the level of assurance that stakeholders will get after the audit has been done is much, much higher. So what I'm trying to say is that the previous slide that we saw, where we looked at audit as something like a burden, I want to say it is not a burden. It is something that enables us to put before the world, before the outside world, a kind of a position about our organization, which brings trust and which enables various stakeholders to take decisions in terms of working with us. That is how it has to be looked at. And I said, not negatively, but constructively. The intention is that there is need for improvement all the time. Now, if an organization is 50 years old, on the 51st year, can that organization say, well, I am completely without any observations or findings? In the 51st year also, there will be observations and findings, because as the operations increase, as complexities increase, as areas of our work increase, then everything goes, all those areas are new areas where we will have to check whether there is an assurance that everything is going on well or not. So it is such a dynamic, all the time evolving process that we have to approach it like this. Next slide. Then we come to the types of audit. Okay, so generally there are 3 types of audits that are done. One is what is called the statutory audit. Okay, that you all understood. And when we were talking about audited financial statements, the statutory auditor is the type of audit. The statutory audit, or the statutory auditor who has been appointed by the organization, does the audit and certifies the financial statements, which talk to the outside world and tell the story about our financial health and our financial progress. That is what is called statutory auditors. Now, this statutory audit is a mandatory condition under the under income tax law, as we had seen when we were talking about income tax, that our 12AB registration as a not for profit in the income tax act, where our income is not taxable, that particular situation will happen only and only when our accounts have been audited by an independent auditor. Okay, so you need an independent auditor, and that is what is called as statutory auditor. Okay, there are, besides the statutory auditor, under the FCRA, you will need to get your FC, your foreign contribution audited accounts also audited by the same auditor, and the statutory auditor can also issue the FCRA audited statements. Sometimes the charity commissioner for various trusts which are in several states might also specify what is the requirement that they have from the statutory auditors. So sometimes uh, the regulators under whom we have got constituted, okay, whether it's the registrar of societies or whether it's the charity commissioner or whether it's the registrar of companies, when we had seen three types of organizations that can do not for profit work, they might also have specific requirements in terms of what needs to be included in the audited financials reports by the statutory auditor. Okay, so that is something that we need to also be mindful of. But mostly, that the statutory audit is from the point of view of income tax and FCRA, but by and large, okay, but and is mandatory. So what the statutory audit does is basically examines transactions, records, processes, controls, and says compliances, and says whether this gives a true and fair view of the financial position of the organization. The second one is donor audit. Again, this will be based on your grant terms and conditions. So you'll have to see your grant contract, where we had seen when we were looking at the grant, uh, the session on grants, that the donors can insert a condition in the grant contract about audits. This is what I'm referring to. So a lot of donors now are, including audit of the grant of that particular grant, not the entire organization, of that particular grant that has been given by the donor, and that may be done during, if it's a 5-year project or a 3-year project, then after midway, after 1.5 years or 2.5 years, that is when they might come for an audit, or they might come for an audit after the completion of the project period. But that is something that will change or will be dependent on what is what is mentioned in the grant contract. Very important to therefore learn about the grant contract and see whether there is an audit component, and when that audit will be uh, when it will be done, and the action that has to be taken based on the donor audit. Now, the donor audits can insist on the statutory audit report in addition to the donor audit. So if you see most of the grant contracts, the donors will also say, besides our own audit, we will also want you to provide us with the audited financial statement of your organization every year during the period of the project. So that is on the left hand side. The statutory auditors audited financial statement is what they are then referring to. The third one is what is called as internal audit. Now, donor audit is not a statutory requirement. It is a requirement based on the grant terms and conditions. The third one is what is called as internal audit, and therefore the word internal. Statutory can also be called as external. Now, internal audit is also not a mandatory condition for most organizations, especially society and trust, okay, because the acts don't say anything about internal audit. However, for Section 8 companies, if they are falling into certain categories, then internal audit can be mandatory. Otherwise, the internal audit, even for Section 8 companies, is not mandatory. Now, why do we need internal audit? Because the internal management or the management of that organization wants to see, before the audit is done by an external person, that is the statutory auditor, to see whether there is any gap in our operations or the gap in our work. That is something that is the need for internal audit. So before somebody external points out to any gaps, can it be checked internally? Now, the internal auditors can be both an external person who is a professional, but in many organizations, internal audit is also done by internal staff. So it will all depend on what kind of an organization is it, what is the level of evolution of that organization, what is the need for internal audit based on the kind of size, geography, volume, donors, all that. Then unless there is a sufficient amount of need for internal audit may not be made mandatory. Internal audit also serves one more purpose. While statutory audit is looking at what happened in the previous, it is retrospective means for the previous period. When we have statutory auditor for an audit, for instance, currently audits might be going on in organizations, then what happens? They are doing the audit for the period 1st April 2025 or 24 to 31st March 2025. That's historical data. Now, based on the historical data, they will make the recommendations and say whether it is correct or not. But is that relevant, or should we look at the prospective data and look at forward looking? So internal audit is more forward looking. Internal audit says today this is the position, in future this is something that we should do. Statutory auditors is always backward looking. Backward looking means they will look at a period of time which has already been completed. It's a historical data, but they have to give that opinion. Internal audits is more progressive in the sense that it gives the organization an opportunity to improve in the future. And that is why I call it prospective and progressive. Now, again, I want to say internal audit is not mandatory. It will all depend on the need for internal audit. And internal audit can also be done by people within the organization without additional cost. Internal audit has to be looked at as a serious exercise because it helps us to look at gaps in our internal control processes, and also how should we look at changes that are coming up, risks that are coming up in the future, what should our planning be. That will also be part of internal audit, which will not be part of statutory audit. This is something that I want to say. So uh, that is internal audit. Now, so statutory audit, donor audit, and internal audit. There could also be the CNAG audit, as I mentioned, if it is a government institution. But normally when we talk of audits, the types of audits are these three. And smaller organizations may not have internal audits. The donor audits will be for donor projects, and the statutory audit will be for the entire organization. And where there are FCRA registered entities, the FCRA audited financials will be a separate set of audited financials and done by the auditor out of the total operations. So you will have the consolidated audit or statutory audit done, and also the FCRA audit will be done. So there will be two kind of audit reports when it comes to an FCRA registered entity. What is the audit process? Okay. And then we will see before the audit, during the audit, and after the audit, what do we need to actually look at? So nothing very complicated up till now. It's only we have to understand that we need somebody to say, yes, you are doing the right thing, you are doing everything right, or you are not doing some things right. So some things, if you are not doing right, then can we do that right in the future is what it is. What is the actual point? So the audit process starts like this. There is a period of audit. That is what is called as the reporting period. Now the reporting period generally is the financial year. So generally the financial year is what is treated as the period of audit, 1st April to 31st March. every year is what normally the period of audit may is, but it might change also. So one has to first decide what is the time frame for which or the reporting period for which the audit is being done. The second is what is called as management representation letter. Now, the management representation letter we had seen in our session on financial statements, and I want to repeat it here for your recollection. This is the letter that the management gives to the auditor saying that we are providing you with all information for helping you to do the audit, and if any additional information they would want to provide, which is something that has not been kind of shared earlier, or which is material for the for conducting the audit, or which is something that is relevant for the auditors to know, that will also be made part of the management representation letter. Basically, the management representation letter says we are in all good faith giving you all the information and that is required for purposes of you to successfully conduct that audit. That is what it means. After the audit has been conducted, then the auditor will come up with what is called as the management letter. Now, this management letter means is a letter that is addressed to management saying that these are the findings and observations that we have come up with after conducting the audit based on the information that has been provided. Now, the management letter will have all kinds of observations and findings that we were not able to satisfactorily answer during the course of audit. If we are able to satisfactorily answer to all that and they are agreeable to it, then it will not be part of the management letter. So all those findings which the auditors think are material, they think are important for attention to be drawn to them, that will all be part of the management letter. And the management will have to respond to all those observations formally in that letter. Okay. You know, that letter will also be put up before the board as a governance tool, and the responses that have been provided will also be shared with the board. So the responses will be provided against the management letter, and based on that responses to the management letter, the auditor will decide to give its independent auditor report. Now, we had seen the independent auditor report is the top report on the financial statements, and when it is attached to the financial statements, those financial statements become audited financial statements. So the auditor's report is very critical, because in the management letter, if we are not able to defend or provide explanation for certain serious findings or observations or material findings or observations, that can come in the auditor report also, and that means that the auditor report is qualified. Without qualification, without qualified means that there are observations which have been made part of the auditor's report, and that is a very damaging or negative point, because when people read such an audit report, then they might not want to deal with us when they make the decision making. So always it should happen that the management letter responses does not lead to any qualification of the auditor's report, and the unqualified auditor's report will only give the true and fair view, will only give that impression or that confirmation that the financial statements give a true and fair view of the health of the organization. Now, once the auditors have given that audit report, then against the management letter, where we have, against the observations we have responded, or against their recommendations we have responded, then before the next audit cycle, we have to provide them with what is called as the action taken report, ATR, as I have mentioned there. Now, the action taken report means that last year, when you have given us a management letter and we had given you an assurance that we will do all this 1, 2, 3, 4 in terms of actions, these are the actions that we have taken, and this is our action taken report. Now, the action taken report will be the first report that next cycle, when the auditors will come, they will ask for, because that will be the starting point for closing the previous management letter and starting the audit process for this current financial year. That is how the cycle will keep repeating. Your auditors may change during the course of this period, because normally auditors might be appointed for 3 years, 5 years, normally, because it's good to also do audit rotation. Okay, auditor rotation. I see organizations where for since 20 years the organization is there, since 20 years that same auditor is there. There is no auditor rotation. So auditor rotation means that you are changing the auditor every specific after every specified period of time, maybe 3, 5, 7 years, so that you get fresh ideas and fresh blood is examining your records and your transactions, and they may come up with better observations and findings, or better ways of helping you detect any gaps that might be there, because otherwise the auditors become used to your working, and you also get used to the auditors. Now that comfort level between auditor and auditee is something which is a barrier in terms of audit rotation. But auditor rotation is very, very important. So whosoever is your auditor, next year when that auditor is coming to you for audit, then you will first have to put up the action taken report, and he will examine the action taken report and also validate whether that action taken report is actually correct or not based on examination of records. This is the process of audit that is being followed. It will be the case with most audits, but internal audits you may not have a management representation letter, because the auditor is an internal person. Okay, is somebody who will come and himself or herself will want to actually examine your records, because that's an internal exercise. But when it is a statutory audit, this is the process that has to be followed. So the before the management representation letter, the auditor will also give what is called is its own terms of references or scope of work, where it will say, I am supposed to conduct your audit, and this is my scope of work or my terms of reference for conducting the audit. And against the terms of references is when what we provide as the management representation letter. And the management representation letter and the information that we provide is audited, and the auditor comes with the management letter, followed by the independent auditor's report, which becomes part of your financial statements. And based on the ML assurance that we have given on various findings, we come up with the action taken report before the beginning of the next cycle of audit. Next slide. So audit process before you. So now we are seeing the audit process divided into, so we have seen what is the audit process. Now, in terms of period or time frame, what happens before audit, what happens during audit, and what happens after audit is what we are trying to understand. Why? Because we need to be properly prepared for conducting the audit. So the first thing that we need to understand is we need to organize our resources, our documents, our whatever is our area which will be audited. We need to ensure that we organize our records accordingly, okay, our systems accordingly, so that when the auditors come, we can provide those records quickly. So before audit, please see, based on the scope of work of the auditor, what is the scope of work and what is expected from you as a person or your function as a department, if you are heading that department, in terms of the scope of work of audit. And you yourself and your team need to organize the documents and systems accordingly. Okay, they need a lot of auditors need a lot of information. So the auditors will also give you some, when they come, the scope of work may also say these are the details that may be required by us before we come for audit. So we have the tally backup, the dump that may be required. We might need the policies and procedures. We might need, your previous audit reports, and we might need these samples. And, based on that, they might give you the samples also. They might also give you indicatively the systems and the areas that they might want to actually look at more detailed. They might want to do field trips to understand the program. All that they will indicate well in time. So you can prepare that information before they come. so that you can provide that information and also discuss that information with them rather than start collecting that information when the audit has started. Okay, you might appoint a point person in your function if you are the functional head, to be able to who understands the your function and your work vertical, and also understands some bit of how audit is done, so that that person can coordinate on behalf of your department with the auditors. Okay, we can when they come for your particular function, you can keep a designated place where they can sit, and you can provide them with that information. uh, you can also read the management representation letter, where all the information that has been provided will also be mentioned by management. Now this helps us understand against the scope of work what is the information that has been provided by the organization. So that is something that you can do before the audit starts. Okay, so that you are prepared for responding, for being for undergoing that audit. Next slide. Now, during the audit period, the first thing that needs to be done is, have an opening meeting. Now, why does the opening meeting need to be done? If the opening meeting needs to be done to be able to understand, the auditors, that mutual understanding that I was talking about. Okay, so that is something that needs to be done during the process of audit. So the auditors have come and you will have kind of an opening meeting with them. Now the opening meeting will enable them to get a better perspective of your function, or if you are head of the organization, and that opening meeting will set the tone of the audit. So when somebody comes as an auditor to your organization, first explain to them about the organization and about the function and how it is done, so that when they see the papers or documents, then they are able to relate to what was explained to them in the opening meeting. Please have a point person designated who should be able to take care of them. Okay, in the sense that they are able to share their findings, their draft findings with that person. That person can be able can kind of coordinate. Now I'm not talking of only the finance people. In program also, they will take a lot of information. And if we do not provide the information in time, they will come up with findings, or they might come up even with a observation saying that information was not provided, which is very damaging. So if you are heading the program function, then have a person, if you are not able to devote full time, who will coordinate with these auditors to explain to them documents, to be able to clarify certain things, and to also obtain the queries or questions that they may have. So they may have certain clarifications, certain questions, and to those questions, the answers have to be given. Okay. So, you know, if they have a field trip, then that person can coordinate that field trip, make them understand what is it that is, there in terms of uh, that particular function. During the field trip also, he can accompany or she can accompany and explain what those documents they were shown in the office and how it relates to the field realities. If that is the case, then lesser number of observations will come. This is what I want to also tell you. So when there is a field trip, the person who is coordinating the audit for your program function, it should be the person who should also not only provide the documentation, attend to any queries or clarification, but also be, coordinating the field trips, so that that person can then explain or relate or show the relevance of that document to the field realities, with the result that based on such clarifications and understanding, unnecessary observations will not come. Now, before the process is over, or before the audit is complete, then we should ask the auditors for something called the draft observation. Okay. Now, why do we need the draft observations? Because after the as soon as the audit is getting completed, we will have to provide our response to the observation. When I'm saying draft observations, they are not still part of the management letter. They are only in draft. So remember the difference between draft observations during the audit stage and what comes as observations in the management letter. The observations that will come in the management letter is where against the draft observations, the responses are not acceptable to the auditors. But at the draft observation stage, if the observation of the if the response is acceptable, then those draft observations will be dropped and they will not form part of the management letter. So you may have a lot of observations that are there. Will all the observations be part of the management letter? No, because a lot of observations that have been made may be answered satisfactorily by us. And that is why I say the relevance of having that mutual understanding, mutual interaction, and not delaying or staying away from the process. Because if you stay away from the process, these observations, because they have not been answered, and they could have been answered very easily, and the auditors would have, dropped the draft observations after understanding the situation, is something that is something that we do not need to neglect, is what I would want to tell you here. Okay, that's very important. I mean, that's a very practical thing that I'm actually telling you. So these are things that need to be done during audit. Next slide. Now, after audit, so you have the draft observations. A lot of the draft observations, you will make the responses. Keep the responses ready. For some of the draft observations, you can provide the responses immediately, which is if they are factual. But if they are more qualitative, where some more discussions need to happen, then at the end of the audit period, there has to be a closing meeting, or what is called as the exit meeting. So we had the opening meeting, and which was at the time when the audits had started, and now we have the closing meeting or the exit meeting at the end of the audit process, because the audit process has come to an end. Okay. You may not provide all the responses at the time of the closing meeting. Some of the responses may still be there, because even after the audit is over, the management letter might come after you have made more responses, have provided more responses, and only for those areas or observations where the responses are still not acceptable will become part of the management letter. Okay. Therefore, in the management letter, only those observations where we have not been able to fully satisfy the auditors should come. Otherwise, it will become a very big letter, and it might actually have a lot of those observations which are not material, which are also not required in the management letter, which is not required to be looked at by the governance structure of our organization. If you have too much of observations in the management letter, it may not be looked at very favorably by the donors. Sometimes the donors might ask for the management letter. Okay. So that they can understand what is the kind of observations that they have come up with. So the closing meeting is to understand the draft observations, which we have not still been able to explain. But quickly after the closing meeting, we will have to provide the responses. Okay. Because that response will decide whether it will come in the management letter and responses. So after the management letter and the audit report has been issued, then you have the action taken report based on the management letter. Okay. So the final report will come, and the management letter will be prior to that. In the after the final report, you will have to make an action taken report. And that action taken report, the auditors will review the action plan. You will have to review the action plan based on the action taken report. So whatever is the action taken report, 1, 2, 3, 4 observations, we have come up with actions program. They say now we will have more better MIS capturing these parameters. We will now have these records and documents also captured. We will have the planned journey cycle filed, actual journey cycle versus planned data filed in chronological order. So many of those things uh, uh, will be observations where you might actually have to take certain action, and those actions will have to be implemented in the next year after the audit is over. So that action plan, one, for your function, and the action plan has to be reviewed periodically. And once it is implemented, then next year when the auditors will come, then there will have to be given, they'll have to be against the management letter given an action taken report. So against each observation, the management's assurance and the actions taken, and what is the and that is the report. And the auditor, before starting the audit next year, will want to validate whether action has been taken really or not by getting documents, by checking transactions. This is how the audit process is actually improving your your systems, your processes, because we have seen what is the role of audit, to see whether the systems and whether the policies and procedures, which is nothing but the internal controls, are in place, number one, and are actually being implemented. Next slide. Now, so this is all about audit that I wanted to tell you. What I want to say is that we have to have an understanding of what audits are, and we have to have an open mind around audit, because audit is something which will improve our kind of organization, and therefore has to be looked at. This has to be looked at constructively, not as a negative connotation. Now, I want to come to an area which is called fraud, where we need to understand it, and I will do it quickly, because probably this is an area which has a negative interpretation, but we need to still understand, because at times we might in good faith get involved into a situation which we did not realize was something that was being done by other person to take advantage and to cause harm to us. Because in our organization that we are working, there are all kinds of people, and therefore we need to be very vigilant. That is what I'm saying. Now, when we have to be vigilant, means we have to understand how people might actually work, so that they might actually cause harm to the organization, and they may also cause harm to you, because they might use your good faith in terms of taking advantage. Next slide. So let's understand what the definition of fraud is. Basically, definition of fraud is deception. Deception means something which is shown as correct, which is not correct, which is correct, which is actually incorrect. So deception is something that is shown to be good, which is actually not good, which is actually bad. This is what is called deception, and this is illegal. This is unethical. So you get an unfair advantage because of this deception. You thought, so the other person thought that this is what is actually happening, but you may have a fraud. You may actually commit an action based on that deception. So if you are making a false, if normally it involves representing some information, misrepresenting some information, underrepresenting information, concealing some facts, not sharing all the facts, okay, or using misleading tactics, okay. So you are deceiving the person. मुझे बेवकूफ बना दिया. That is what is by using wrong information, by giving less information, by giving misleading information, by giving some information which is actually blatantly wrong, but you have believed that, or maybe even illegal. You might say, well, this is something that is allowed in law, which is not allowed, which is illegal, but based on that you have taken a decision, and that has led to a fraud for the organization, because the other person has taken it, has got some advantage out of it, but the organization might have been put to harm, and that harm, because of your decision, will be your responsibility. So the fraud has been caught against the organization, but the responsibility will rest with you. Okay. Now the elements of fraud, what fraud includes is deception. That is something which is wrong is shown to be right, or which is incorrect is shown to be correct. The intent is wrong. The intent is to take advantage. Okay, the intent is to take advantage and cause harm to the other person or the organization. There is materiality, which means the amount involved is significant. And the fourth is it causes harm to the organization. So generally frauds will happen when the amount of money involved is also high. Over a period of time it can be high, so you may have small incidents of fraud, but overall after a period of time the total amount may be very material. Now, how do you prevent frauds? Is through internal controls. So if you have a good internal control framework around cash, in around bank, around accounting, around procurement, around assets, around inventory, we have seen all those. Even around HR, sometimes you may have bogus employees. But if you have good internal control procedures in HR, that is, you have HR policy, you have verification of employees that are joining current new joinees, then those are nothing but internal controls. Second is awareness training. So awareness training is what is sometimes also called deference, where you are trying to create awareness about being able to identify fraud. Okay, sometimes we tend to believe everybody is good, everybody is ethical. We will see the concept of ethics also. So but that might not be the case. So we must also understand what could be situation where you are getting deceived, or there is a question of there is a situation of deception, the amount is material, you are relying on wrong or less than required information. All that is something that you have to be very careful. The third thing is the whistleblower mechanism, which means that if a person has come to know about a wrongdoing, about an illegal act, can that person blow the whistle and say this act is being done and still be protected by the organization? So whistleblowing mechanism is a certain code of conduct where if any wrong is being done, is pointed out by the employee before more harm is done. But when you are pointing out to something wrong that is being done, you are also vulnerable. So under the whistleblowing guidelines or mechanism, the whistleblower is given protection by the organization that nothing wrong will happen to you because you have drawn attention to a wrongdoing. So those are some of the ways in which prevention frauds can be prevented. But the biggest way is good controls in your organization, about which we have talked in the last session. Okay, training. Periodically, there should be some kind of a capacity building around these areas. New ways of fraud that are coming in should be made known to people, so that when actually they are working on their desk or on the ground, they are able to detect such problems based on their understanding during the course of training. And of course, the third one is the blowing the whistle about a fraud at the right time. Sometimes what happens is too much time has elapsed and people just don't want to talk about it. So you must have a good whistleblowing mechanism where people feel protected and are encouraged to report any fraud at the right time before a lot of harm has happened. Now, if there is something which has been done without intent, okay, we have seen that the fraud is intentional, okay, it is illegal, it is intentional. The point number two, when I'm talking of elements of fraud, the intent is intentional, it is deliberate. But if it is not, then it can be an error also. So, but that will be one off. So fraud will actually be kind of repetitive, and there has to be intention. So one has to have a fraud reporting and investigation mechanism to be able to see whether this was an error or whether there was a deliberate attempt of intent of the person who has committed that kind of a mistake, fraud, whether it was a mistake or whether it was a fraud, is something that needs to be understood. And that distinction we have to be very clear about. Okay, next slide. So we are coming to the fraud tree and the three types of frauds that are generally classified as far as frauds are concerned. One is what is called as corruption. The second is what is called as asset mass management. Okay. And the third one is asset misappropriation. And the third one is financial statement fraud. So we will see examples of all these three. So broadly, all frauds can be categorized into these three buckets. And we will see what each of these three buckets actually mean by giving you examples. That will give you more clarity in terms of what are the types of fraud that can be practiced. Now, I am not trying to take this session on fraud just to, bring that up, but I'm trying to say that when you work on your desk or your on ground, then please have your third eye open to be able to kind of monitor situations like this, which might end up becoming a fraud and becoming your responsibility. That is something that I'm trying to tell you. So being proactive, being vigilant, being all the time on your toes is what I'm suggesting after understanding what this entire thing is all about. Next slide. So we go to the various types of fraud, and the first one is what is called as corruption. Corruption means because of your position, you are taking undue monetary advantage. You are taking undue monetary advantage because of your position, and that undue monetary advantage is basically illegal. Now, what are the kind of examples of corruption? Okay, so corruption basically means that you, because of your seat or your position in that organization, you are taking undue advantage and influencing decisions, okay, to your advantage and getting some kind of gains, some kind of gains, and those gains are at the cost of the organization actually, because the money by way of that you have taken by way of corruption is a cost indirectly or directly to the organization. Now, what are the kind of examples of fraud? One is conflict of interest. Now, what is conflict of interest? Conflict of interest means some area of work where you have two levels of interest. Suppose you are working in the this in an organization X, but you are also working on the governing board of an organization Y. Okay, or you are on the governance structure of X, but your wife is in the management in Y. So those are situations where there is a conflict of interest. Now, conflict of interest means that because of the position that you have in these two organizations, it is likely to create a conflict situation, and there could be loss to the organization. So suppose your Y position in your Y, you are a board member in X organization, you are the CEO in Y organization, and if you are submitting a proposal to the X organization, because you are on the board in X organization, your proposal of the Y organization might be considered more favorably. In such a situation, you have to report your conflict of interest because of your position. And that conflict of interest would mean that you will not be a party to discussion of your proposal of your organization Y by organization X. So you have to see that conflict of interest situations are addressed, and this is what is called as conflict of interest. Now, in terms of procurement, you might have corruption. You may have a bid rigging. Bid rigging means you might ensure that the prices that are coming from the proposals or bids that are coming are higher than what the price should be in the for that product, or what is the higher the price than what is the price in the marketplace, because you have artificially rigged the bidding process. You have artificially ensured that through the vendors have given higher prices. That is what is the meaning of bid rigging. Okay, then you might have a situation where you may do sole source procurement. We have seen sole source procurement where you are avoiding competition. Okay, so that is something you have to see, that procurement should be having competition. It's only an very situations where only one person is having that proprietary right, only then sole sourcing should be done. And sole sourcing should not be done, for any other product. Restriction on vendors participating in the competition process. That is something that is very providing advance information to certain bidders. Now, that might be a conflict of interest situation. You may be working in this organization, your brother might be running a shop somewhere, and you are purchasing a product. Then you might be, that is a conflict of interest situation, but that is also a procurement corruption. Okay, procuring goods or services which are not required. As far as sales is concerned, now we don't do sales, but just example, then is that you are making sales by making wrong and giving wrong information. Okay, what the product cannot deliver, you are saying this. That is what is also a question of uh, corruption. Issuing credit for false claims. So some claims that have come for your products, for your sales that you have made, but they are actually not correct. They are false. Then the other ways of corruption is kickback. Kickback means that uh, uh, from you are giving back some amount of the money from the higher sale price that you have charged to the organization. You are giving it to that person who is in that influencing position. Okay, because of his position. That is what is kickback. Bribery is basically openly giving money, but it is not linked to the money being kicked back from the sale proceeds. That is the difference between bribery and kickback. Okay, extortion means that you are trying to create a sense of fear in the other person and saying you'll have to give me money. That's what is called extortion. That can be physical, that can be mental. That is also a way of corruption because of your position. So bribery, kickback, and extortion are all parts of corruption. Please remember that. Okay. So, but corruption is because of your position. You can influence decisions like all the examples that I have given. So that is what is called corruption, which is one part of one type of fraud. Next, go to asset misappropriation. Next slide. So asset misappropriation means uh, you take away there is theft of there is stealing of cash. Okay, which has already been drawn from the bank by the organizations from the account uh, before it is accounted for. It can also be theft of cash after it is accounted, which is basically called cash larceny. Okay, it's called cash larceny. Okay, so there can be skimming of cash, which is once the cash has been actually received and accounted for, then you are taking the cash out. Skimming is like skimming cream out of milk. Upar say. Okay, that is the that you are removing cash, but it has been brought inside, accounted for, but somehow or the other by some excess charging or forging certain invoices or bills or forging certain expenses, you are taking the cash which has actually been received and accounted for. Okay, so cash larceny means it has not actually been accounted for but has been received. Cash skimming is after it has been accounted for, because it has actually been accounted for, but now you are trying to steal the cash through over invoicing or bogus invoicing. That's what it is. Then you have, that is the difference between cash larceny and cash skimming. Okay, now there can be other situations. Okay, like uh, making some kind of exchange. For instance, another one is basically exchange transaction. Because the exchange rates are different, you are manipulating the exchange rate. uh, then there can also be write off of certain expenses. or incomes that can be realized, but you are fraudulently writing it off as saying that this money cannot be received. So those are certain examples of asset misappropriation. We can continue with that. Next slide. Then fraudulent payment. You are making payments which are bogus. There are missing checks. Missing check means that the sequence or chronology of the check is there are gaps in that, and those checks have been shown as cancelled but have been issued to somebody else. Okay. Pay name is altered, so it has gone to somebody else's. Payment has been made, but the payee is somebody else because there is a asset misappropriation. Check not released to the intended person, okay, but diverted through a forced mechanism to another person. Okay, that is something that is also there. Overloading expenditure. So expenditure, whatever is there, you are actually overloading and then making the payment and taking the money. So those are some of the examples of asset mismanagement, misappropriation. Next. Then so we are now coming to the financial statement frauds, which are basically financial overstating or understating income, expenditure, or your assets or your liabilities in the financial statements. So you may have a timing difference. You don't recognize the transaction. That is what is called as timing difference. Okay. The other one is fictitious transaction, understated revenues, okay, concealing some of the liabilities and not showing them and showing over stated valuations. That is something that is there. Improper valuations and disclosures, though all those are ways in which you are either overstating income, understating expenditure, overstating assets, understating liabilities, which is not what is the right thing, because the financial statements have been manipulated or the fraud has been done with the financial statements, but they will be caught at some point of time during audit. So those are all fraud. Next slide. Now there is something called red flag. Red flag actually means that there is an indication that is coming, some kind of indication is coming that some fraud might happen. So red flag basically means advance kind of an information or advanced kind of assessment that may be done. It's a red flag. So whenever there is some danger of a fraud that is happening, you might have to raise a red flag. That is why there is something wrong that is actually happening. Now, so what are the examples of red flags? One is your behavior. Now, the behavior might be extremely arrogant or extremely meek. Matlab, you are too much, soft or too much hard. Slow in work, that can be another way of understanding that there is something wrong. So what I'm saying is we are seeing examples of red flags. We are seeing examples where red flags will give some indication that there is something that is happening which might be wrong and can cause harm or lead to a fraud. So this is some kind of an advance notice or message that can happen. Advocating honesty, talking too much about honesty, loyalty, faithfulness. Sometimes that is also a cover up. Spending habits. Sometimes people who get very little amount of money, their spending habits are not in line with the income that they draw. Then also it can give an indication. Some key employees are only dominating the company. That means that they are taking they are only holding everything to themselves, which is not correct. The segregation of duties, checks and balances are not happening. Key employees are having close relationship with vendors. That is the conflict of interest. That is what I'm saying. Now that conflict of interest may be because of the relationship, but also can be because of the relationship with a vendor who may not be a relative. So that has also to be seen. Employees having outside businesses. So if you have additional source of income by way of business, that might also be a red flag, because that might lead to a situation where a fraud might happen because the person is also engaged in some other activity. Next slide. So these are some of the things that I want to tell you which are very common, but sometimes we tend not to give too much of attention. And what I'm saying is that not undue attention has to be given, but somewhere at the back of your mind, you must be able to assess if such situations happen. That is what is saying. Disorderliness means that there is complete chaos in the accounting system, in the programming system, or mostly in accounting and banking. Then there could be red flags. Then disaster situation. Every time there is something or the other going wrong, that is also because there might be a deception that is getting created. Good systems but left to autopilot. Nobody is checking whether the systems are working properly. Sudden profit. This is in case of companies where in loss making times profits are coming, and profit making times loss is coming. That might also be a red flag. Incomplete information, okay, or records are incomplete, accounting documentation is incomplete, recording is incomplete, filing is incomplete. That might also be a red flag. Next slide. So we are continuing with red flags, situations which are too good to be believed. Okay, this is not possible. I don't think this is right. So that third sense will keep telling you that there is something wrong. Orphan funds means that you are raising money for some cause which is not actually a cause. Excess knowledge is also sometimes a red flag. More knowledge than what that person should know in that position. Absence of rotation of duties, which means that that one person is doing that work for many years. So it is very important to also rotate people in that function or department. Non-material observations, which means that they are behavioral observations, and those behavioral observations can give a lot of red flags also, is what we need to also be mindful of. Next slide. So now we come to two, three topics that I want to do quickly. One is ethics, accountability, and transparency. Now, these are words that we use, but we have to practice these words actually in our organizations. That is how I will want to say. Now, all this that we are discussing about fraud is something which is theory, which is something that we should know, we should be aware of. And it's not a topic which should be kind of talked about, but in our day-to-day work, we should be able to identify situations which might be abnormal, and therefore be able to quickly report it to your supervisors or take action, rather than not take action, delay action, or take action based on something which is wrong and then be held responsible for that. So you will be losing, somebody will be gaining, your organization will be losing. So it is sometimes not very right to be too good also. Okay, so you have to understand the various situations which might cause harm to you because you are holding a position. The concept of ethics, accountability, and transparency. Next slide. So what is ethics? Ethics is nothing but morality. Okay, ethics is ethical behavior, something which is right. Okay, so when you are making decisions, are you making the decisions on moral principles, on ethical principles? I will do an action or take a decision which to my mind and to my heart is the right decision on the principles of morality. So if you are morally thinking about things, which means what is moral, which is something which your conscience will allow to do. Will your conscience allow to do fraud? No, your conscience will not allow you to do fraud. And therefore your decision making, if it is ethical, will not be having a component of element of fraud. There will be no illegality. There will be no intent to defraud a person. There will be no material gains that you will make. So if you work with the principle of ethics, then that is what should drive your behavior. Now, ethics is both in your personal and professional life, but here we are talking about the organization. So Basically, moral principles is what we are talking about. Is this morally correct or not is what is the principle of ethics. Okay. Uh, what is good for an individual, what is good for the society, and what is good for the organization, that is the same thing that we will apply for the principle for being ethical in our organization. Okay. Right thing in the right way and right thing. Then normally for ethics, you have in organization what is called the code of ethics. Now the code of ethics is part of the HR manual generally, because it says what ethics means in the organizational setup and what is unethical in the organization setup. So the code of ethics will also talk about fraud and say fraud is not part of is an unethical behavior. Harassment is an unethical behavior. Discrimination is an unethical behavior. So you will have the code of ethics in your HR manual, and that code of ethics will honesty is an ethical or a code of conduct. Honesty, punctuality, all these are ethical principles. Now those will have to be practiced in the organization is what is being said. Now that is part of the code of ethics, and the code of ethics is actually something that we regularly have to give our training. So should be part of the normal training that has to be given. As I had mentioned, there has to be some kind of capacity building around fraud. So around ethics also, which is the antibiotic for fraud, we have to train people on understanding and imbibing and implementing the code of ethics. Okay. The code of ethics can also be for vendors. The code of ethics can also be for external consultants. So please remember, the ethical code can be for all people other than the employees also, which are dealing with the organization. So ethics is a abstract term which means doing right thing in the right way based on your conscience, and because the organization doesn't have its own eyes and ears to understand whether an action is ethical, but we are the ones who decide whether it is ethical or unethical. Therefore we need to document it, the ethical behavior, in a code of ethics. That is what it is. Okay, next slide. So coverage of ethics, I have already told you. Basically, in terms of governance, in terms of discrimination, in terms of your social responsibility, in terms of your fiduciary responsibility, or your actions should be ethical. Okay. And sometimes there are legal provisions in the law which ensure that this ethical behavior is also part of the legal framework. Okay. So, the governance framework, you might have laws, compliances laws, which says that this is unethical. Okay. Harassment, sexual harassment is unethical. Okay. Children working in wrong situations or in difficult situation, hardship is unethical behavior, which is prevented by law. So some unethical behavior might be completely prevented by law, and some unethical behavior might have to be prevented through the code of ethics as the right way of working. Next slide. We come to what is called examples of ethical violation. Now, ethical violation is basically, I have something which I have already said: discrimination, race, on the basis of religion, on the basis of age, on the basis of gender. Harassment mostly is on the basis of sex, and this is prevented through the Prevention of Sexual Harassment of Women at Workplace Act 2013, called POSH, and you have to have a POSH policy. That's the code of ethics for prevention of sexual harassment. Then you will have uh, unethical accounting principles. So you might, in your finance manual, say the unethical, this accounting principle or an accounting methods or processes will be considered as unethical. Health and safety. So the organization has to look at the health, safety, and environment in which you are working. So that is also an ethical behavior. Okay, and you have to ensure that your staff and your subordinates are given their health, safety, and environment is taken care of. Privacy violation, and now you have the Personal Data Prevention Act (DPDP), which is now going to be applicable to NGOs, where you have personal data privacy that is brought about through law. Abuse of leadership, your particular, because you are in a leadership authority, you are abusing your authority. Nepotism and favoritism in terms of engaging people or giving undue benefit to some people, those are all unethical behavior. So you may have a policy for nepotism, so that you do not give favoritism, you do not do favoritism to somebody on the basis of nepotism. Nepotism means you have your immediate blood relative or distant relative as included in the organization, and because you are in a certain position or a relationship, therefore that position may be you might do certain unethical behavior. So all these are violations of of ethics, which can be prevented either by law or by the code of ethics. Now, you might also have a situation of ethical dilemma, which means that there will be a situation at times. Dilemma means, there are two options that are available. Both are unethical, but you have to decide. Say, for instance, somebody is doing wrong in your organization, but he is also your friend. So you are in a dilemma whether to report or not. That is what is called as ethical dilemma. Now, if you do not report, then also it is unethical, because you are not taking the putting the the organize you are putting the organization to risk or harm. But if you are reporting it, then probably because he's your friend or she's your friend, you are probably not doing the right thing in terms of that friendship. So those are situations which have where there are two options, or two unethical options. Both are unethical. So one of them you will have to decide. That is what is called as ethical dilemma. And at most points of time in our work and our professional life, we will have some or the other dilemma that will be there with us. Okay. So द्वंद जिसको बोलते हैं, in Hindi it's called द्वंद, which means that there is always a conflict in terms of both situations being unethical. Which one should I choose? Because I know both the situations. That is what is called as ethical dilemma. So in ethics, there is also this ethical dilemma on our workplace that we are always faced with. Okay. Next slide. Next slide, please. So yeah, this is the one I thought it wasn't there. The slide is already there. So it says ethical dilemma is this kind of situations, having knowledge of a false, of a fraud taking place and reporting, okay, due to lack of courage, because he's your friend or your colleague, okay. In marketing, a manager might be asked to, promote a product by misrepresenting. He knows he's misrepresenting, but he's also as an employee and therefore getting salary. So which one should he select is what is the ethical dilemma. Okay, so there are examples that I have already given. Using official vehicle for personal use, okay, that's also an ethical dilemma. Accepting gifts, those are all examples of ethical dilemma that we might have. Okay, and we will have to choose one. Now, if we are ethical, we will choose the one which is less unethical, to be able to address that dilemma. In case we have an official vehicle, we will only use it for official purposes, although we have the other part of using it for personal use also. So the lesser unethical thing is only using it for official purpose. That is what is called the ethical dilemma. Next slide. Now, accountability is basically the question of ownership. Okay, this is meaning, you know, for your actions, you are taking ownership. Whether the actions have led to failure or the action led to success, that is not what is important. What is important is that you are taking responsibility and ownership for the action. Okay, for delivering whatever you have delivered. And even if you have not succeeded, you still are feeling accountable and you are transparent about the success or failure. There's no problem. There was failure, doesn't matter, but you are taking ownership of that. Okay, ownership of that action or the decision that you took is what is called as accountability. uh, so basically it means that uh, accountability implies a willingness to be judged, uh, or to your willingness to be judged or to be accepted and learn from mistakes. So there has to be some kind of openness in terms of owning success or failure both. That builds a lot of trust for that organization among various shareholders. So every or person in the organization, right from the bottom up to the top, should be accountable for the work that that person is doing. And that accountability will be reflected in whether you are owning that work or not, whether it was successful or not. Success or failure is not important, but whether you owned that failure or success, and from the failure you are prepared to actually learn and improve. That is what is called accountability. The examples, next slide, of accountability are some of them. Okay, you are meeting deadlines on the program, on a particular project. You are meeting the deadlines and you are also meeting the deliverables. So you are taking ownership of both the period in which the deadline, the outputs have to be reached, as well as being responsible for that. Okay, uh, when it comes to financial information, so financial data, even if it is shows a decline, the financial data will be shown without any misrepresentation or without any manipulation. That is what is called accountability. Sometimes we want to only show that our financial position is going up and up, but which may not actually be the case. In a particular year it is down. So it's the accountability or ownership will be to say, well, it is down, this is the reason, and we will take action to improve it. That is what is called as accountability. Rather than by doing some gimmick, we are actually able to show some marginal increase. That is what is the difference in terms of accountability and not being accountable. Then you are actually you are not being ethical, you are not being accountable, you are taking the other routes. Okay, so if there is a, like, for a particular product, if the consumers are giving some feedback, you are trying to improve the product and make your product more accountable. That is also something which is accountability. Okay, so if the consumers have raised some issue, you are wanting to improve it because you are accountable to the consumer. Similarly, if any supervisor has given any feedback, then you are trying to actually the supervisor's feedback is being taken by the reporting person, and he is trying to improve himself. That is how he is taking ownership for that particular position and activity and wanting to improve. So these are some of the examples of accountability. Basically, accountability means that whatever action we have taken or work that we have done, we are taking ownership of it. If we have succeeded, very good. If we have failed, then we will, from that failure, try to improve so that we become successful next time. But we will not diverge from our ownership or responsibility from that position. Next slide. So then the last one is transparency, and I think I have been talking of this. Everything that you see and everything that the other person sees is the same. So it's like transparency is like a glass. So both sides, people are seeing, they are seeing the same thing. That is what is called openness, honesty, okay, and straightforwardness. So you are, whatever it is, it is. I mean, you are not trying to color it. You are not trying to show it differently. That is what transparency means, a question of optics. When I see that, I see it like that. When second, third, fourth person sees, they also see it the same way. Now, transparency, if there is, will bring about trust, it builds relationship, it brings about, a kind of a, see-through situation for the organization, and therefore there is very little to fear as far as our operations are concerned. Okay. The teams will be stronger because the same thing is being discussed with everybody in the team. Okay. Resources, it increases engagement. Okay. And it brings about a culture of trust. So accountability, transparency are culture related matters, so one has to look at it. Now why I am doing this as the last session and the last topics is to bring the fact that these attitudes and ways and topics are also very important for us to succeed as programmers, and that defines the culture of the organization, and that also defines how people will like to deal with you. The last slide, next slide, is examples of transparency. You know you disclose your plans, and the plans are openly disclosed, and we will implement the plans that way only. So we are open about our work, we are open about our future plans. Our culture of the organization is more not like a boss but more like friends, collaborators, mentors. That will have a sense of transparency. Whatever we have promised, we will do action as per promise. That is transparency. We will do things as we are, so being what we are, not pretending what we are. So those are some of the examples that I just wanted to put as transparency, and that ends our presentation today. Next slide, you can take off the presentation, Shumendru, and we can take questions. uh, One question that I have is, so I'll before actually close going to the questions in the chat, what I want to say is that this session might look very abstract, okay? But we have to do this session for us to draw attention to certain topics which become part of your value structure and your culture. And it is important to draw attention to them because when you work, at times you might not look at the wrong side of things that might be happening, and you might actually put yourself into trouble. Similarly, when you work, you have to work with principles of ethics, principles of accountability, principles of transparency. Now, how you want to translate these values into your day-to-day work is based on your decision, your action, your situation. But what we are trying to bring is some examples, some ways of drawing attention to these topics. That is the reason. And before that, we had done the session on audit and assurance, primarily for you to understand that audit and assurance is something that is required for purposes of validating our work as far as financial matters are concerned. Sometimes non-financial matters are concerned as far as audits are assurances are concerned, which is something that is not may not be non-financial but needs to be done. So what is quality audit? That So basically, quality audit is to audit the quality of programming. Okay, how well did how efficiently the inputs got converted into output, and what was the effectiveness? Basically, quality audits are that. Sometimes quality audit might also be in terms of our communication messaging. Sometimes they may also be in terms of the output of research. So we might want to, but generally the quality audit is for the programmatic part. Can an unqualified statutory be our auditor audited again? Can a unqualified statutory be audited again? I didn't get the question. Can a donor auditor ask for documents? Yes, they can ask for documents. I mentioned that to you. Sometimes So you have mentioned about the 7%, which is the indirect cost. Okay, now you'll have to go back to the grant contract to see whether the grant contract had mention of whether 7% will be given without any questions asked, or whether the 7% that you have spent, documentation to prove that the money was spent on was has actually been spent will be required. If it is said, if that latter is the case where the documentation has to be provided, then it can be audited. Uh, uh, Normally, the donors will not go beyond what they have given. Okay, so that is what is donor audit. Uh, they cannot do a full audit unless the donor audit will be restricted only to our to their donor project generally, unless there is an implication of the grant donor grant funds which has wider implication for the organization. Then they might go up to a certain point there, but they can't do a full audit of the organization. No, that otherwise the distinction between statutory and donor audit will go. That is what I want to clarify, but you have to be very careful. They might ask for some additional information which is beyond the donor contract, just to understand whether that particular area has been rightly done or not. So you will have to see your grant contract and see what is the scope of the donor audit that is there. As far as the 7% indirect cost that you are referring to, please go back to your grant contract, whether it says that the 7% is a lumped figure for which you can spend on your, administrative overheads or your shared cost, as I had mentioned, or will you have to provide documentation and say this money was spent or not? This is something that you will have to say. How do we distinguish between whistleblowing and malicious whistleblowing and good whistleblowing will come out of the kind of matter that has been brought to the attention of management by the whistleblower. Now, if the whistleblower has done maliciously, then there is an investigation process. And if in the investigation process, it is found that the matter that was referred to, or the red flag, or the fraud, or the matter that was brought up by the whistleblower was actually malicious, then that person can also be, action can be taken against that. Now, if you see your HR manual and where the whistleblowing policy is there, the whistleblowing policy provides for the process of investigation for a matter that has been brought forward by the whistleblower. Now that process will distinguish whether maliciously or whether it was genuine. Just like when you have the posh policy, then there can be situations where the uh, cases of harassment may be malicious or may be genuine. So for all such cases where there is unethical behavior, fraud behavior, or any allegation that is there which has been done maliciously, the investigation process will decide whether it was done maliciously or whether there was definite intent in harassment or in terms of wrongdoing that will come out of the process of investigation. Now, whether the investigation process was done or right or wrong, that I will not be able to comment. But assuming that the investigation process was done judiciously, rightly, impartially, this distinction between malicious and genuine will definitely come up. And a person who has done it without that, but without with wrong intent, probably will also get punished, which is part of your which will also be part of your policy there. So I have done most of the questions, and we are nearing completion of our session. Today's session is slightly abstract, I can again tell you, because there are several topics that we have covered. But I think the audit and assurance is very clear. Audit is something that you understand and you go through, and why you should be actually actively involved in it is because of the improvement that it brings about even in your process. Sometimes auditors might give to the programmers certain observations and findings and even recommendations because they are working elsewhere also. And those could be very good practices. So if we look at it constructively, yes, assurances, reviews, they are done by management to give themselves confidence that whatever is the information, whatever is being reviewed is, I mean, is which is critical to the success of the organization, is something that is there. But this assurance and reviews may be period, maybe ad hoc, maybe one time. Audits, of course, are based on the law, like the statutory audit is annual based on income tax and by an independent auditor. Donor audits depending upon the grant contracts. Internal audit again based on your finance manual and whether you have an internal audit process. Okay, if there are any questions, we can take unmute and take for another 2-3 minutes. Special audit is basically when a particular matter, okay, so a special audit would be that I find that for this particular activity, like you have a communications activity. Now, in communications activity, you had a on-ground activity for a period of 1 year, and you find that something probably was not correct. Okay, at the end of the this thing, then you might conduct a special audit for the on-ground communication activity that was done. So special audit means a particular activity where there is some irregularity that has been noticed or brought, and it is material because you have spent a lot of money, but the action activity was not done as per the program, and there is a possibility that there is some kind of corruption, some kind of kickback, bribery, because in certain areas of activities there may be something that has been done and may not have got, may not be possible to capture it. The amount of money, whether it was spent properly or not, if it is not documented properly, might lead to the vendors and the staff colluding with each other, and the vendor influencing that particular on ground staff that I will do this, let it be like this. That is the situation when a special audit can be done. uh, yeah, special audit has nothing to do. Sujata, special audit has nothing to do with statutory audit. Statutory audit can be done even after special audit can be done even after statutory audit. It can be done even when the statutory audit has not been done. So, for instance, this financial year that we are running, in the month of April and May, something was done and some wrongdoing has come. It's not as though we'll wait for this statutory audit to happen for this year and then do a special audit. We can do the special audit because special audit should be also done considering the time frame. It should be time sensitive, because if too much time is allowed to pass, then we might not be able to construct the activity and see whether some wrongdoing has been done or not. All right, over to you, Indranil, if there are no more questions.
Sure, sir. So, thank you, everyone. Thanks to Sharad sir for taking the sessions. And it has been a long journey of 2 months, and we have seen multiple questions, and all the questions has been duly answered by you. So, thank you very much for conducting these sessions, and thanks to participants as well to give us a consistent attendance across the sessions. And we had a participant of 91 individuals from representing around 65 NGOs in this particular batch. And it has been a long journey, a memorable journey with all of you. And today is the end of it. So thank you everyone for joining. It was a good journey with all of you. Thanks to Sharad sir. A lot of thanks for conducting these exhaustive sessions. Thank you very much.
Thank you. Thanks a lot to everybody. And I hope you will practice whatever we have studied in the last 2 months, last 8 sessions. I have tried to be very focused on the people and the work, so that there is nothing that I'm teaching or talking which is not relevant. So please practice whatever you have learned. Then only it will become successful. Thank you very much for your patience for the last 2 months. Thank you.